So market closed. We're Thursday, 1st of December. Yesterday was the wild day with the Fed, with the markets pumping up, which I did not expect. Although I still am rather convinced that we cannot move much higher. And although you're supposed to respect the chart and the tape and not have much of a bias at all, I cannot help but think of the fundamentals, which are incredibly bearish. So I'm still bearish. We're still in a recession. In fact, we're not even halfway through. Most people don't even think that we're in a recession yet. So for me, the bear case remains in place. Let's look at things technically, though, starting with the SPY. No, let's start with Credit Suisse because I keep forgetting about Credit Suisse because I always follow the same routine. Let's look at Credit Suisse, shall we? Now, the market's been going up non-stop. I'm surprised. Yes. Look at Credit Suisse, absolutely slaughtered. This is the daily chart. We basically touched $3. I think we even, yeah, $3. To me, $3 is full. I mean, it's lost all levels, so there are no levels anymore. But I feel like you'll see how I drew these trend lines. Let's go to the weekly. That's how ridiculous it is. That's Credit Suisse. Look at that. It looks like a penny stock going bankrupt. Some Chinese pump and dump. Horrible stuff. I actually quite like how horrible it is. Now, you can see how $3, once we lose that, we lose a long term. I mean, this is, yeah, it's relatively accurate, in my opinion. A long term descending support. I mean, this is strong support, long term descending is better than ascending, and long term is as good as it gets. When you lose that on news with volume whilst the market's going up, I mean, that's just worst case scenario. To me, you lose three, that's it. You just go towards zero. Um, Beautiful. Credit Suisse. I don't know that much about the ins and outs. I know they're involved in fraud and they've had their problems, and I don't even care. I don't even think it's the worst. I think Deutsche Bank is worse. That one's doing better, but not that much better, huh? Look at that, a little drop. To me, the banks are not. They're one of the black swans, and Credit Suisse is the darkest swan in the pack. And I've been saying it for a while. A lot of people have been saying it. Watch out for Credit Suisse. And when you see what's going on, okay, we're still at the weekly. Look at that, down 6% on another market up. Well, actually, market was down today, but you know, that's watch out for this one. This could just set the whole financial crisis going. And then you're talking about not just inflation, recession, bear market, but financial crisis. And I don't think we're far away. Anyway, let's get back to the S&P. Sorry about that. I just didn't want to forget about it. Now, the S&P had a crazy move yesterday. For me, resistance was the descending line. Moved it up a little bit because we had this one here, and I didn't think the market would move too much higher. And if we look, actually, the market really, it was a bit like me yesterday at the close of the day. I didn't know whether it would go up or down. I thought it was a bit of a, yeah, it could go up. If it does, it's here because it had such a strong close. It closed high of day, but we're at resistance, so it could go lower. And I remember after a big Fed bullish day, the next day there was cold water poured all over the party. So I wasn't sure, and I feel like the market was a bit like me, just unsure. But it's not bearish or bullish. It's just sideways after trying to break out of this descending line. So I kind of understand why I did that. So I would call it indecisive today, not bearish or bullish. Yeah. Nasdaq. Again, this resistance, I haven't touched them. Don't need to move it. Perfect. So again, like the S&P, obviously, sort of indecisive, doji, not bearish or bullish. You would expect on a normal chart, on a normal day, that this would find continuation. Now, it did close green technically, but normally it would be a bit stronger after a move like that. And when a candle closes at the high of day, what it's telling you is it was going to go higher, not necessarily close higher, but at least test higher, but we just ran out of time. That's what that kind of candle means. So the next day you expect it to at least go higher. It doesn't need to close higher, but at least test. So the fact that it went higher isn't surprising at all. And it basically closed where it opened. So again, not bullish, not bearish, but I'm bearish. So I'm going to try and take that as a win. The Dow Jones, yeah, that's just been screaming up. I just don't understand why you would buy this, but I mean, at least up here, the resistance, yeah, we ventured high, but this one stays correct. Basically, it was red, not by too much. Retraced the big move up. For me, I feel like the market has to be tired after this crazy run. I know that, it found some legs because of yesterday, but must be exhausted after this run. So I'm gonna lean towards bearish again. Yeah, but it's a sideways day. It's not really bullish or bearish. Russell 2000, a bit like the SPY, basically closing red on the day after a breakout of the descending line. Also touched previous high. Resistance was kind of perfect. Um, Again, I'm bearish, but I think this is kind of a neutral sideways after a breakout. I mean, I've seen so many of these sort of breakouts at descending, then they go sideways, and then they make basically a cup and handle formation. This whole thing is the cup. Then you have a little handle. See if I can draw that. So you have like a little cup, and then you have a little handle, and then bam, you break higher. But you've still got to draw the handle, still got to have like several days, 3, 4, 5 days of handle, and then break higher. Or it could be 2, 3 days. But I don't know. For me, I don't understand how the market can keep going up. I mean, fine, fine. The Russell is it's not that crazy, but the Dow Jones, give me a break. The VIX, yeah, it's quite surprising that it's down that much, given that the markets were red, right? You should expect it to be a little bit green today. The VIX for me is broken. Although, if you remember this day here, where just all of a sudden it was up 8% and the markets weren't that far down, I think one of those days is coming. Again, anywhere in the 19s, especially low 19s, for me is a buy. I don't buy the VIX because I don't trade the VIX. I think there's a lot of corruption involved in that. And I think Credit Suisse was behind it, right? TVIX, if I remember. Yeah, they were. That little fraudulent volatility ETF. So, I mean, but I would buy it here if I could hold it long term, as long as there's not much decay in the ETF. So even here is a buy. So that's the markets, basically sideways day after yesterday's crazy run. I'm still bearish. Yeah, that's all I'll say about that. Let's move to the dollar currencies. Yeah, I thought it might go a little lower. Look at that. We closed right at the previous support, these two here. So I did expect to move lower given yesterday's close. It could continue lower, especially given today's close. Look at that, down 1%. Look at that USD Japanese yen. We looked at that yesterday too, and we think it might go here. Euro closed high, could go higher. Yeah, for me, the currencies suggest dollar still has more room to move lower. So next stop, yeah, basically here 103.5, let's call it. And then after that here, yeah, for me support is the what I've identified is basically correct. So that's the dollar, and the currencies, the equivalent will be obvious. Look at that pound. Next one would be here 1.26, etc., etc. I'm just going to keep it simple. Look at the DXY. So looking for the next stop here. Let's go and check interest rates, which were surprisingly weak for me. That was a little bit of a surprise. I know the market's going up and dollar's going down, so that you'd expect yields to go down, and it's true, but wasn't expecting the 1 year to be that much red. You see, it's looking very triple toppy here. If you draw a little trend line, yeah, it's looking a bit toppy. And you got to watch out. I mean, if we, for example, take out this low, then you basically got a high and pretty much a guarantee that we go back down. So we'd start to take this out. Then yeah, you can call that left shoulder head, but me, whatever. I would just call it like a breakdown of support, double top, even triple top. But yeah, you lose this, you go straight here, and basically you might bounce a little bit from here, but then boom, all the way lower to ascending support. She'll probably be here by then. So that's the 1 year. Not many people watch the 1 year. Yeah, look, the 2 years basically done it. Here's your left shoulder head, right shoulder. I forgot why I drew this like this. Was that supposed to be a trend line? Yeah, basically going here exactly, and then there. But if you take the time component in, it might be a few days later. So probably here, which would probably coincide perfectly with this previous breakout zone. So around here, you can always undershoot a little bit, but basically you get yeah, you can see that just coming down here, bouncing, going there. That's pretty obvious to me, even though we're quite a few days away. 5 year, where are we? Yeah, previous resistance becomes support. But let's say there's more support here. Let's see. Basically, follow the same trajectory. So if they're all going to move low, they're all going to move low. This one's a little harder to tell actually, because we're kind of at support. Yeah, not stronger support. But if all the yields start moving lower, this will go straight through, go straight here. 3.4, 3.2. Yeah, I think every 0.2% increment will become basically support. But no one really cares too much about the 5 year. It's the 10 year. 10 year will provide support to the whole other interest rate derivative. So yeah, I reckon we'll end up here. Yeah, perfect trend line. 30 year. Yeah, it might even go a bit lower actually if they all move as low as it looks like they might move. So yeah, yields lower for me. Dollar lower. Markets, you would say higher, but I'm gonna say sideways. I can't say higher. It's just done too much of a move. The case is not there. And fundamentally, I mean, everyone's just, oh my God, the Fed will slow the increase, yeah, it's gonna be 50 basis points in December. You know, that's a lot. They acknowledge that they've moved too fast. I think they were way too slow. I'm talking years ago they should have moved, but okay, they've moved a lot very aggressively in 1 year, but we have way too much debt. You know, look at government spending, that doesn't slow down. Inflation is the biggest problem. If they really are keen on slaying the inflation dragon, they have to remain extremely hawkish. They have to keep rates high, long for a long time. They have to cut government spending. Otherwise, you're going to get inflation through other means, you know. And and there's no way of hiding from inflation now. It's gone beyond Wall Street. It's in Main Street. So, and it's a hot political topic. You know, it's not. It's something that gets voted on basically. So, for me, I think the market's a little wrong in going up this much because I don't think there's going to be a rate cut anytime soon. And just because the increase is slowing, it doesn't mean you're getting any easing. I mean, I think there's a lot of pain for the market. A lot of companies are going to suffer through their earnings. A lot of companies are going to keep laying off people because they're already laying off people. And inflation will stay high whilst you're in a recession. It's like the worst combination. Stagflationary recession basically equals depression, and the market's going up. Now, the one thing is, yeah, I understand you can hide from inflation in stocks because stocks are a good inflation hedge. And to me, gold and silver miners are the best of those stock hedges. But I don't know, the market's supposed to be moving down if inflation is too high and up if inflation is too low because of how they anticipate the Fed's reaction. But to me, they got this wrong. So whatever, don't need to overthink it, you know, keep it simple. But for me, okay, yields could move a little low, but ultimately they're going up higher. Yeah, especially the 10 year. I think we've got to go back to 4%, back to reality. And maybe there'll be a sell the news event in December when they increase the rates. You know? Okay, so let's move on to gold and silver, which I should have done following the dollar. Now, gold and silver had a nice day. Forget it, it's reset now already, but because it's 11 o'clock in Europe. But this outperformed the markets today, right? Markets were basically a little red sideways. Gold was up, it was 1 point something percent. So let me see what it was. Wow, that's pretty crazy. It's basically 2%. 2% move in gold is huge. Silver, you'd expect more, but yeah, and it did 2.5%. But 2.5% is not as impressive as 2% for gold. So gold and silver outperforming the markets, you know, right to resistance here. I don't know. Oh yeah, this is prior resistance. Yeah, we've taken that out. I don't know why I didn't identify this one. This is as easy as it gets. Oh no, I did say 1800 and then we'll see 1840 to 60. But anyway, I forgot to put it there. So closed at resistance, very strong, very strong. I mean, well, what can I say? It's if it moves lower, support become. And if you really look at this, this is beautiful technical stuff. I mean, look, you've got these nice ranges, descending line, breakout, basically touches up here 1720. You can see that this was resistance. Didn't come back down to test it. Keeps going. It goes all the way up to here, 1780. Okay. Basically, this is also resistance. Maybe some people got greedy, maybe trying to weigh 1800. Pulls back, basically touches prior resistance to become support. Only touches it for 1 day. I nibbled a little bit here, but really not enough. Not enough. Very, very annoyed. Plus, I sold on the way up again too early. Basically, breaks out, comes back, tests, and then just goes straight through. Next resistance. Now what? If we go sideways, you go back down to 17, and you go back up and up here. It depends. It depends what the market does. It depends if gold follows the markets. I nibbled a little bit out again today, even though I am seriously light. There were some that were Yamana, for example, Pan American Silver, and Newmont. Newmont, that was my heaviest holding. I haven't sold any because I've been underwater and I wanted to hold for dividends. But today I just nibbled a little bit of 49.57, a little bit out because I was finally in profit on that one because I bought it too early at 52 was my first buy on the way down. We'll look at that later. But gold basically is technically very, very, it's just adhering to technical analysis so far quite well. But I still don't know how it's going to trade with the markets. So far, it's outperforming the markets. But what happens if the market flushes? Does gold come down with it? I think it does, especially because it's been going up quite a lot recently. So more likely to come down when everything changes. But for now, it looks good, looks strong. Next move, it's it is harder to call this. I think this area here is going to be a bit like this area here. It's not as obvious. Like after it's happened, it's obvious, right? 1780 to 1800 is resistance. Yeah, but over here, where's resistance? For me, 1840, which I mean 1839, because it might not get to 40. From 1839 to sort of 1860, let's call it. Obviously, you can go all the way up to here, 1880, but yeah, I don't know. You'd have to sort of go sideways, break out, and then 1880. But I can't imagine us going there unless the dollar is really getting destroyed because they completely reversed rate increases. It's starting to cut. I don't know. It would take a lot for me to see gold go up there, even though it belongs higher than the all-time high right now with inflation and the war. If you think about how it's been trading along with the markets, for it to all of a sudden go up, it has to be rate related. So anyway, silver stronger than gold. Look, gold basically at its 1800 resistance of here, of let's call it mid-August. Silver, where's its mid-August? Yeah, forget it. Just totally destroyed. And even the one before, it's above. Like silver is very strong. Look, it's in no man's land. It's cleared that 2250. Completely cleared it. I mean, look, yesterday it closed really high, just about 22. Closed above 2250. Wow, actually, when I think about that, that's pretty significant. It's basically no man's land. When's the next resistance? I can't believe I haven't drawn it yet, but it would be, it would be the descending line. It's not going to be anywhere here. It didn't really count. Touched it once. Yeah, no man's land. You might have little stop offs, $23, little sideways. Maybe time at 24. Yeah, another round number. Why not? No wonder it bounced off it there. And then by then you get to 25, it'll be 25. So every $1 range, nice and simple, 23, 24, 25. Do I see it getting there? I love silver to death, but no, 10% move in silver, that can happen in 3 nice days, but you'd have to have a reversal in like a massive reversal in policy, which some people think has happened, but I just don't see it. We might have okay. It was a great day, great close, cleared 2250. We could go higher, especially with the dollar looking lower, right? I mean, we could have some days where I was thinking about this, where it's a pure currency move, a dollar related move where gold and silver go up because the dollar's going down, regardless of what the market's doing. The market going up or down, don't care. But how will gold stocks react? Let's say the market's down, but gold and silver are up because the dollar's down. I think they need to have a small up day in the miners. I've seen that where you have like minus 2% in the S&P, but the dollar's down. And then you have the miners up like 1 or 2%, which is actually a beautiful thing because everything else is getting slaughtered. And you're not only not losing, you're actually making a little bit of money. So that's always cool. And anyway, we've been outperforming the market a lot here, not just today. So I mean, some stocks are up 4, 5%, 6%. And if you look at the the general markets, they're not doing too amazingly. I'll also look at Bitcoin. Sorry, what am I doing? I haven't looked at the GDX or GXJ. Let's do that. And look at that. Look at that outperformance. You think silver did well? Look at that. Yeah, clear skies. Yesterday's close is beautiful. Look, we're so much on target. I can't even see it. I don't see the need to change any of these. So, I mean, we cleared this target 30. Yeah, we closed just above 30 on GDX. These are very mini levels, so I don't think they count too much. And today they didn't count too much, but psychological numbers. So next resistance is 31. It's getting easy now. It's just simple increments. And then 33, again, this is quite far away. This would be the same as silver going all the way up, I think. GDXJ, yeah, this target's also good. So here we are, 37. Then we have 37.8 maybe, and then straight to 40. Let's just see what it can do. But we can see the miners really they had good action today. I think they outperformed the markets generally. Remember, the markets were sideways to red, and here we're up 4%. But the dollar was down. So you can see the miners and the metals are really reacting to the dollar more than the general markets here, which is interesting. It's interesting. Something to take note of. Sometimes you get these small changes in the markets and it lasts several days and you can maximize some profit, if you pay attention to these trends. So for now, it's interesting. Let's look at Bitcoin now, though. I mean, this is just going up, so not much to cover. Yeah, let's look at Bitcoin. I was going to be my portfolio, but it's okay. Yeah. Now, what's interesting about Bitcoin, and I like 3 minutes for this. Yeah, I remember drawing this. I drew this saying this is the scenario. That the ascending line is the weakest one. If it breaks, this is what could happen. And I guess it was kind of correct. Yeah, except this part here. But this part here is the Fed. So that doesn't really count, if I can say. This is kind of accurate. This is very interesting. Yeah, actually, especially imagine the Fed was bearish, and remember where the Nasdaq was on that ascending line, ready to flush. For sure, this would have gone down here and actually flushed. I mean, especially on the volume that we had post Fed. So I think this is pretty interesting. But anyway, I didn't want to show that. That wasn't some sort of a I'm so good moment. It was more to show how Bitcoin today, and this is still correct, this 1.3% down. Bitcoin still hasn't cleared basically this area, recaptured its 17.5 to 18. Let's go to the 1 hour chart. This area. No, let's do the daily chart. I'm talking about this area here. that was support, you know. Most of it was 1900. Let's call it 1800, low 1800s, 18,000, sorry, to 17,500, the absolute low it made initially on the flush. It always held this area for several months. And then we flushed it, obviously, and we're still underneath it. You know, despite the markets move up, especially the last few days, we still haven't reclaimed it. And now we're red. So if Bitcoin can't reclaim this area on the market move up, what happens if we do get that market move down? You know, this will take like 2 or 3 days of a market move down to come back to test this area. And the next day it's going to new lows. So for me, another sort of black swan asset, you know, whether it's Credit Suisse, the whole crypto sphere, or just war escalation, or some insurance company, just credit default swaps, just so many cracks in the system. China lockdown 3.0, Taiwan. I don't know. I'm not going to guess, you know, alien invasions and all that, but just the mere fact that we're at 30 trillion plus, 32 trillion in debt. I say we as if I'm American, but you know what I mean? 32 trillion in debt, interest rates going up, staying up. It's unsustainable. The energy crisis in Europe, winter's not even really started yet in Europe. It's starting to get cold. You got blackouts in Ukraine completely. It's starting to happen in Moldova and all that. Just generally, I think you're going to have like 1 or 2 years of extreme hardship. And what? You've got the Dow Jones about to test new highs, and forget it. Forget it. Anyway, this is kind of a long rant. I didn't cover my portfolio. At least I covered Credit Suisse. Just very quickly on the portfolio. Just another nice green day across the board. Yesterday was better, but what can I say? And Newmont, just to show you that nice move back up, nailed this here. 49, almost got the high, 57, basically the high. So that was nice. A lot of the seniors made good moves. Pan America, I sold it right at the close for that little move up, although it should go higher. Anyway, gold and silver miners doing great. I nibbled some. I've nibbled too much out. I just feel like we will move down the markets, but yeah, I've been wrong about the market move the last 2 days, so I don't want to oversell this. And I feel sorry for anyone who's short, because I understand your thesis, but the market is just a little irrationally bullish here. Anyway, good luck. Let's do another video tomorrow. Yeah, good luck.